Post market hours on Friday, SEBI came out with a circular to make some clarifications and certain additional disclosures with respect to short selling in the market. Basically, betting against the rise of a stock, to put it very, very simply. So what has SEBI said? SEBI has reiterated that all class of investors are allowed to short sell, but no naked short selling. So the idea is that you should have that security that you're planning to short sell, so you can meet your delivery obligations at the end and settle that trade. So F&O securities are eligible for short selling, but SEBI reiterated that we can go ahead and review the list of securities available for short sales at any given point in time. What is new is additional disclosures. Now, any institutional investor that is going to be undertaking a short sale in the F&O market, that institution needs to disclose upfront that this is a short sale that is being undertaken. Retail investors also have to disclose this, but they can do that by the end of the same trading day, the day they're placing that short bet. Brokers then have to take all of this information and send it to the exchanges the same day or before the start of trade, before 9:15 the next day morning. And then exchanges have been mandated to collate all of this information coming from brokers and release it to the public on the exchange website once every week. So additional disclosures is what SEBI seems to be mandating now. But let's understand this further and see, if there is any impact, any ramification with respect to market volatility. We have with us, of course, representatives from HDFC Securities. Ashish, Rathi, whole-time director at HDFC Securities, is with us. Ashish, thank you very much for joining in. So explain this to us, because in any case, institutional investors were allowed to take short bets in the F&O market alone, and naked shorting was not allowed. So apart from the disclosures, which is the new bit, what else changes as per SEBI's latest circular?
So if you look at the SEBI latest circular, so it gives a reference of 2007 circular, which is December 20th, 2007. It's an exact replica of the same circular. So if you go word by word, it has been repeated. So I don't think so anything changes. It's a reiteration of the earlier circular, which they have now made it by way of this circular. That is the understanding which we are getting, because earlier also the circular stated the upfront disclosure has to be given retail investors at the end of the day. Now, why specifically this has come up once again as a separate circular, I think so the clarification will have to come from depositories, clearing corporation and the exchanges with respect to what is to be reported, what is to be disclosed. Because even if you look at the 2007 circular, these all were there. And if you look at particularly in 2007 circular, they have mentioned about SLBM has to be made available for the institutional investors to short sell. So if you look at SLBM market was launched in 2008 by the clearing corporations. So 2008, SLBM also got launched. 2007, these were already in place. Now this is again being reiterated in 2024. So I don't see any reason for any impact in the market.
So, which is why, there must be some logic to it. I don't know. We'll come to SLBM in just a bit. We need to understand how deep and how functional that market really is. But first, on the disclosures, if you're saying the 2007 circular itself mandated the same disclosures, then is it that SEBI is reiterating this now as a reminder? Because these disclosures, at least to the wider public, were not going out. When we would not know if an institution has taken a certain large short bet, a certain big position against any stock. I don't know if that data is available real time to the public as of today. Is it?
So right now we are also not aware if the data is really available to the public or not. So maybe SEBI would have reiterated that circular. But I think so if you look at the circular, it is being marked to exchanges, clearing corporations and the depositories. So any further, I mean, in terms of the operational process, how to disclose, and if they want further disclosures, it has to come from them on how it has to be disclosed. Because your point is valid in terms of right now, if you want to see a disclosure of this sort, particularly, I am not aware whether it is available on any site.
Does this in any way impact the market efficiency? I know it's a reiteration, but your thoughts per se on the move on banning itself.
No, I don't think so. It will impact the market. See, what happens is, particularly if you look at it, short selling is allowed. I mean, basically, there is a naked selling and there is a short selling. Okay, naked selling means you cannot. There is an absolute ban on it. You cannot sell it in the open market in case you don't have the shares. Now, short selling per se, what do they mean is you can do a short sell provided you have the securities, or you can borrow it from the SLBM market. That is the intent of the entire, or that is the interpretation of the entire circular. I don't see any ramifications because of this into the market. But yes, I think so. They wanted to reiterate it to the entire market. That is why this circular, or maybe some master circular, some piece was not available in that. So they would have reiterated by way of a separate circular.
Ashish, so let's come to the SLB mechanism. Like you said, I mean, I was wondering what is new, because this circular says that we should set up a stock lending and borrowing. This is way back. We saw these circulars like, decades ago, right? So let's discuss. Tell us, how efficient is the stock lending and borrowing mechanism right now, for whether for retail or for institutions?
So SLBM particularly, I mean, you can obviously short in the market and get the shares through the SLBM market. So right now, the only problem with SLBM market is the liquidity concern. So if you look at yesterday, I think so 35 securities traded on the SLBM platform. I have some numbers for the month of December. You had some 16,166 trades, some 10 crores of lending fee collected, and 257 securities in which trades has happened. So the liquidity in the SLBM market for the institutions to participate has to be much higher than what it is currently. That's the ask. So even
Okay, so finally, we just have 60 seconds on the chat. I mean, if you were to put out your 2 bits of recommendations or advice on this, because I think there's no denying the fact that we do need a vibrant market where short selling should also be allowed to bet against what could be an irrational rise in share prices. That's the whole idea of short selling, right? So what needs to be done further to ensure that we have a healthy market where it's a deep market where short sales can happen efficiently?
So one is keeping in line with the regulatory guideline. One is this SLBM market depth has to increase. Now that could be by way of market making or something like that. But once that there is depth in the SLBM market, then you can see a lot of these things happening. And particularly if you look at the regulatory framework, it allows only F&O stocks. So F&O stocks as it is, you can go ahead and short it in the F&O market. So SLBM market liquidity has to be robust in order to ensure that we have a proper short sell mechanism in place for the institutions as well as the retail customers.
Okay. All right, Ashish, thanks for weighing in on this and explaining to us the status quo right now and perhaps what more the regulator and the exchanges can look at. Thank you for joining in today. That's a view from HDFC Securities on the latest circular on short selling. Let's take a quick break on that note. We'll come